Well, so far, the positive data out on the global and local economic fronts managing to keep the local unit well supported. What have you made of this continued and recent rand strength we've seen filter through?
Hi, Alishia. Yeah, around about midweek last week, we saw some positive news coming out globally and domestically, as you mentioned, a better than expected GDP number here. We've seen equities rise quite dramatically. We've seen the dollar weaken. And that's all fed through into the rand strength, and we broke below that key 8 rand to the dollar level. And then on Friday we saw further upward movement of those factors, and of course that drove the rand quite dramatically down to around 775. And I guess going forward now, it's all eyes on equity markets. Can this bullish sentiment hold? And will the dollar continue to weaken? And those are the questions that we need to answer.
Of course, this is strength coming to the fore as the dollar comes under extreme pressure. But important to highlight here is that dollar weakness is just one of the factors behind this strength. And while that may be the case, it's not just against the dollar, as is usually the case, that we're seeing this rand strength filter through. It's against the basket of currencies, isn't it?
Absolutely. I mean, the rand performed remarkably well on Friday against all currencies. Euro and pound included, and of course against the dollar. And I guess a number of the factors coming through now is the potential MTN Bharti tie-up. We're still very unclear as to the nature of the flows, but certainly if the deal goes ahead, that will, that somewhere between the region of $2 to $5 billion worth of inflow if current sort of projections hold. We've also got the yield play coming into vogue at the moment. The rand still as an attractive yield investment, and of course the dollar weakness and equity strength, and they're all playing into the rand's hands at the moment.
Of course, as I was saying earlier, tomorrow we start to see the beginning of a new set of economic data globally, particularly pertaining to the consumer in the US. Should we be setting ourselves up for added volatility as we progress through this week?
Well, I think so, Alishia. Certainly all eyes will be on that data. As you said in your build-up, the consumer plays a large part of the US and indeed the global economy, and the whole objective of the quantitative easing that we've seen by central banks across the globe is to get confidence back into the system, to get the spending going again, to get people buying, housing prices on the rise, and the general market sentiment to improve, which will of course allow the economic growth that we're looking for to feed through. So it's all down to the consumer at this point in time. Probably a little bit early to suggest that we'll see a resurgence of consumer confidence. But if we do see a stabilization or continued stabilization, then I would imagine the current bullish sentiment will maintain itself.
Locally, we've got inflation data out this week, Wednesday and Thursday. I mean, what's your outlook there? Because this is certainly the first time when it comes to CPI that Eskom prices will be affecting. Should we be expecting the continued easing we've been getting used to?
Yeah, I'm a little bit reluctant to say that we're going to see further interest rate cuts in the domestic economy. The Reserve Bank has done quite a bit in a short period of time, and I guess it depends on your view as to how soft the domestic economy is. But we are at very low levels on interest rates, particularly on real interest rates. Our bank rate slightly above the projected inflation rate at this point in time. So, at the very most, we're going to see one more 50 basis point cut. But for the moment, I'd adopt a wait and see attitude as far as that is concerned, because, as I said, we've come a long way in a relatively short period of time, and real interest rates are very low.
What role do these domestic economic indicators, like our inflation on Wednesday and Thursday, play? What role do they play in this current market? Because some have been suggesting that it's minimal at best.
At the moment, it is minimal, Alishia. International factors are playing the biggest role at the moment. And as I said earlier, all eyes on the equity markets and what happens to the dollar. Domestic factors are playing a smaller role, but of course they do play a role in terms of interest rate regimes and economic growth, and whether that instills investor confidence. So it's an underlying factor at the moment, albeit a smaller one than perhaps usual.
Probably the bigger one will be US GDP data out on Thursday this week. What are you anticipating on that front?
Again, I think the market will just be looking for stabilization and you know, sort of coming in as expected, because GDP growth around the world is the key, because that obviously feeds through into employment and non-farm payrolls as that will come out. So again, those will be key factors to see whether those numbers can in fact justify the recent equity market buoyancy that we've seen.